The Iraqi Dinar, IQD, is once again under the spotlight as a mix of economic reforms, policy statements, market responses, and external pressures stir uncertainty and cautious optimism among investors, citizens, and analysts. Over the past few weeks, multiple signals have emerged: currency market fluctuations, renewed talk of reforms from the Central Bank of Iraq, CBI, and serious structural changes to banking and trade practices. What makes this period especially noteworthy is the convergence of several factors: domestic policy, global oil market dynamics, and internal banking adjustments, all occurring against a backdrop of regional instability and economic challenge. Today's IQD story is not simply about exchange rates. It's about whether Iraq can stabilize its currency long-term, modernize its banking infrastructure, and possibly reshape how the dinar is perceived internationally. On the official side, the dinar remains roughly pegged. Recent data shows the USD/IQD official exchange rate hovering around 1,310 IQD per US dollar. Trading economics: this peg is part of the central bank's strategy to maintain stability while broader reforms are underway. In formal transactions, including banks and government operations, the dinar's value remains stable, a reassuring anchor for many. Yet, the parallel market, where unofficial or less regulated exchanges happen, tells a more turbulent story. In recent days, the dinar has slipped in domestic market trades. In Baghdad and the Kurdish region capital Erbil, USD/IQD rates reportedly dipped slightly. These fluctuations reflect real economic pressures: external demand for dollars, scarcity of foreign currency liquidity, and shifting confidence among traders. For everyday Iraqis and expatriates exchanging money, the difference between official and market rates can be significant and unpredictable. Behind the scenes, the CBI is pushing for sweeping reforms in Iraq's banking sector. As of late 2025, the bank revised its roadmap for private bank regulation, giving lenders more time to meet heightened capital requirements and compliance standards. The aim: build stronger, more resilient institutions capable of handling modern banking demands. Additionally, the CBI has accelerated plans for digital payment systems and e-payment transformation, signaling a move away from traditional cash-heavy transactions toward a more transparent, electronically managed economy. This modernization push is important because it lays the groundwork for potential currency reforms, improved foreign exchange operations, and better oversight, all of which matter for long-term dinar stability. Despite reform efforts, Iraq faces serious economic headwinds that complicate the dinar's outlook. Recent reports indicate that the country's domestic public debt reached 90.6 trillion IQD by September 2025, a noticeable increase from previous years. Moreover, external debt obligations, global oil price volatility, and pressure on state revenues continue to create uncertainty. Some experts warn that banking sector vulnerabilities, including liquidity risks and uneven compliance among private banks, could threaten financial stability, potentially undermining confidence in the dinar. In short, while reforms are underway, structural economic weaknesses remain. These headwinds make any bold revaluation of the dinar risky, at least in the near term. Public statements from the central bank have repeatedly emphasized stability. In recent months, the CBI has dismissed rumors of any imminent revaluation or devaluation, reaffirming that it currently has no intention to change the official exchange rate. However, and crucially, the bank has not ruled out long-term currency reform. In fact, it has confirmed that technical plans to remove zeros from the currency, a redenomination, remain under consideration, although only when economic conditions are judged stable enough. This dual messaging, no change now, but reform remains possible, suggests the CBI is prioritizing calm and predictability for now, while preparing the structural groundwork for potential future changes. Given the current environment, holders of Iraqi dinar and investors considering exposure should watch several key indicators: oil revenues and global oil prices. Since Iraq relies heavily on oil exports for state revenue, sustained oil income supports liquidity and reserves, a backbone for currency stability. Banking sector compliance and strength. Watch which banks meet the CBI's capital and regulatory standards. Those that succeed will likely be critical if any currency transition or redenomination occurs. Foreign currency liquidity and exchange window policies. Reforms in foreign transfer rules, trade finance, and bank dollar access will influence how easy or difficult it is to convert dinar to hard currencies. IMF public statements from CBI, government, and macroeconomic data. Any shift in tone on rate policy, inflation, or debt levels could hint at future adjustments. Domestic market versus parallel market behavior. Large spreads between official and black market rates often precede volatility. For now, the safest expectation for dinar holders is stability, not windfall profits. Given current data and structural realities, the most realistic short to midterm scenario for the Iraqi dinar is continued stability, possibly with moderate fluctuations in the domestic market, but no dramatic revaluation. This conclusion is based on a few factors. The official peg remains in place. Banking reforms and digital payment upgrades will likely proceed slowly, ensuring gradual adjustment rather than abrupt change. Economic headwinds, debt, dependence on oil, external pressures remain significant. The CBI's public stance emphasizes price and rate stability. In other words, for most IQD holders, the value of their dinars in the very near future is not likely to surge, but nor is it likely to crash catastrophically. Think low volatility holding rather than get rich quick. If you currently hold Iraqi dinar notes, here are some practical steps to consider. Don't treat IQD as a speculative lottery ticket. Base decisions on verified economic data, not hype or rumors. Monitor official updates from the CBI, Ministry of Finance, and credible news outlets. Consider liquidity and convertibility. If you may need to convert in the future, track which banks or currency exchange services remain reliable, and check rules for transfers or sales. Diversify holdings. Avoid putting all savings solely in IQD. Consider a mix of stable currencies, assets, or investments. Watch long-term banking reforms. If reform is successful and liquidity improves, the dinar may benefit, but only gradually. Avoid scams and get-rich promises. Many claims about soon-to-happen revaluations are speculative, unverified, and risky. Today, the Iraqi dinar stands at a crossroads. On one side, structural reforms, digital banking transition, and institutional efforts offer the possibility of a stronger, more stable currency in the medium to long term. On the other, economic headwinds, heavy debt, dependence on oil revenues, and a fragile banking sector temper any immediate hopes of a windfall. For anyone holding or watching IQD, the key is realism. Expect stability, prepare for volatility, but don't count on a sudden revaluation. Instead, track reforms, liquidity, and economic fundamentals, because over the next 12 to 24 months, the fate of the dinar will depend more on policy and economics than on speculation.